We have another exciting show for you today and another amazing guest. Welcome to the Tech and Space Leader Show, where we learn lessons from leaders of the next frontier. I am your host, Lisa Dreher, and I'm really excited to introduce our guest for today, Judy Robinett. She is the author of Cracking the Funding Code and Be a Power Connector. Plus, she works with many startups and helps them crack the funding code. Welcome to the show, Judy.
Thank you, Lisa. I'm just delighted to be here.
Oh, thanks so much for making time for this. I know you are incredibly busy. Perhaps we can start by having you give us a little bit of background on yourself and what you're working on today.
Oh my gosh. So, I started life as a social worker. I would have never dreamed in 100 years I'd be in business, but I ended up in business. I sit on 4 venture capital boards. I'm on several other types of boards. Just love helping founders get funded, which is the most difficult part.
Yes, absolutely. So you have actually helped countless founders crack that funding code. What are some of the most common misconceptions startup leaders have when they're seeking capital?
I think the most common one, Lisa, is they don't understand that there's no lack of money out there. 2 years ago, Capgemini did a report, and it said that there was 369 trillion in private global wealth. So there's no lack of money. There's no lack of ideas or information doubling every 2 or 3 months now. But you have to get to the right people. So you have to have the strongest story, which is your deck plus your pro formas, a narrative that you can tell. And then you have to get in the right room, be it angels, venture capitalists, or family offices, to the right person.
Right.
And that's really the biggest one that people will call me and say, Judy, there's no money out there. Or, I'm getting lots of no's. And so I will often suggest that people talk to an entrepreneur who's been successful, or to find a local group that they can talk to validate their assumptions, because what you don't know can kill you.
Sure. How do you decide whether you should be talking with VCs or family offices, or, should you be talking to all of these no matter what? Or is there kind of a different stage that a startup might be at where they would go to different types of investors?
Yeah, certainly. So usually at the beginning, everybody bootstraps and puts money on their credit cards, and sometimes gets money from their friends and their family. And if you do, make sure it's papered, that you've got it in writing. And the first logical choice is to go to angels. Angels would like to coach you. Most of them have been successful founders in companies. They have a longer timeline than the venture capitalists. So usually at the seed or pre-seed, the early stages of funding, you would go to a local angel group. There's over 300 angel groups in the United States today. They're even here in Idaho and close to me in Wyoming. And you can find lists online by just Googling, and there's the National Angel Capital Association.
Excellent. Okay. So what do investors really look for when they're looking at an early stage company? And I guess beyond the deck, what are they looking for?
They're really looking for a founding team that is superb. And, I often call it the 3 C's. They'd like people who are coachable, that will take input. As soon as you've got some yahoo who says, I don't need your advice, I know how we're going to become a $1 billion company like Amazon in 6 months, you're toast. You'll get escorted to the door. And so really important that you be coachable. Your character, never, ever lie. If you don't know something, just say, honestly, I don't know. I'll have to get back to you on that. And your level of confidence, because your number one job is sales. And you're selling to these angel investors initially, but then your next round is probably going to be with venture capitalists. And so they want a strong team. There was a saying by the fellow who founded venture capital out of California And he said, if given a team that has an A team and a B product, or a B team and an A product, who would you pick? You always pick the best team because they can get anything to market.
Yeah,
So
absolutely.
is the most critical. Next would be the market size. You know, how many customers can you serve?
Yeah, yeah. Okay. When you're talking about space and deep tech, a lot of times there's pretty long development cycles that these companies just go through just by the very nature of the business that they're in. How do you work through that with investors? Or, I mean, maybe find the right investors that understand that?
Well, you know, first you need to do your homework, and you can easily, like I mentioned, Google and find any investor. You can find investor lists and find people that are specific to the industry. You can talk to service providers, the people that are lawyers for startups or accountants for startups, or even bankers or your local chamber of commerce. So that's important. And then the next thing to realize is a VC firm actually has a 10-year cycle, 7 to 10 years, usually 10 years. And so most of the investors know you're broke, and most of them know it's going to take a while to get to an exit. Now, angels would typically like to see an earlier exit, 3 to 5 years, and so would everybody else, frankly. But the most important thing to the investor is how much money they're going to make. And so, as you know, Lisa, I always start out with metrics with startups, for instance, saying, if we execute, this company could be worth 250 million in 7 years with 100 million EBITDA with 65% margins. And so, you know, you understand that very first pitch that you do is to get the second meeting, get them in the door, and you need to get them excited. Your pitch needs to be concise and compelling, but I wouldn't worry too much. I mean, space is very much like the medical world. There's regulatory people. Everybody thinks their sector is harder than everybody else's, by the way. But, you know, true investors understand it'll take a while for them to get their money back, but you need to be clear on what are comparables. When do you plan to exit? What are similar companies that have sold in your space so that you can help them realize what their goal is to make money?
That makes sense. You often say that your network is your net worth. What does a truly strategic network look like for a founder?
You know, so for me, you know, I'm friends with lots of top VCs and other people. I think listening in on our call is my dear friend Lila Masterman, who had $2 billion exits under White Star. If I call Lyland compared to my neighbor across the street here in Idaho who drives a milk truck and say, tell me, who are 5 people I should talk to? I'm going to get a very different answer. And so strategically, if you can start building those relationships early before you need them with potential investors. And investors are always looking for a deal. I have investors call me weekly saying, who do you recommend? And so it's getting in the right room, which could be a pitch event, meeting, going to your local college and finding out, you know, who's running the entrepreneur kind of area and getting that intel first.
Yeah,
So
yeah.
strategically, you would also, towards, you know, later as you're getting up and running, you should have an idea on who would potentially buy you. So my friend, Dr. David Beers, had a couple of exits. And the first one was a cancer and oncology. And it was, they didn't even have what they would typically need for an exit, but he sold the company in less than 5 years for 65 million plus stock in the other company. And I said to him, David, you know, you don't even have a product. How did you do this? And, you know, medical oncology drugs are a very tough sector. And he said, you know, I anticipated who the likely acquirers would be. And I got one person out of each of those companies to sit on an advisory board and to listen in full transparency what the company was doing. And then they got into a bidding war.
Wow.
And so strategic relationships could be those that would help you with funding, those that could, help you with finding the right advisors for your advisory board. Every startup needs an advisory board. If you don't have a board, people think maybe you think you know it all, and they will run, not walk.
Yeah. Yeah, absolutely. Okay, so I think you're getting into my next topic, which is what are some of those red flags for investors when they're looking or speaking with a founder, and especially, I guess, the way they actually present themselves?
Yeah, so if you come across as arrogant and know-it-all, you're definitely in the uncoachable bucket. If you tell a lie, I mean, never, ever, ever guesstimate, because the investors are very smart and most of them have seen deals that could be similar to yours. And so never tell a lie. There's many, but certainly you need to know your numbers.
Mm-hmm.
And it isn't as hard as you think it might be.
Yeah, absolutely. What are some of the recommendations you have to make sure that you have the right numbers pulled together for those potential investors? What are those most common financial questions that founders are going to get?
Oh, Lily is joining us. So, if you just have one slide in your deck that is based on revenues, EBITDA, your margin, and it can just be like a 3-year projection, but you don't need all the bells and whistles, because again, when you get into due diligence, this is when they will dig behind the curtain and want to know everything in depth. But you should know when you're going to cash flow, when you're going to break even, when you're going to start making money, and what is your pathway to do that? What is your go-to-market strategy, and what is customer acquisition cost, a CAC? Almost every investor will ask you that. How much does it take to acquire a customer?
Mm-hmm.
People will buy $1 all day long at 90 cents. And so a lot of, founders don't understand how important cash is, and that cash is king. There's a saying that cash covers a lot of sins.
Yeah. Mm-hmm. Indeed. So when a founder is speaking with investors, I think it's equally important for them to determine if the investor is the right type of investor for their company. How should founders assess that?
Yeah, so I would say do as much due diligence on them as they're going to do on you. The first thing I would do is Google and find out if they're litigious, if they're prone to lawsuits.
Yeah.
Some investors are, not many. You also would like to get some recommendations or talk to other people. I made a huge mistake once by not talking to my friends, by a guy who wanted me to raise 15 million, which I did in 2 weeks. And then he said, we don't have an agreement. I won't pay you. Well, if I would have talked to 3 of my friends, they all knew him and they knew his reputation. And
Yeah.
so important, to really do that. You want people as investors that will have your back and also have your future, share values with you, because you can't get a divorce. And you want to be very careful. The other thing I advise is avoid what is known as the dark triad. People that are narcissistic, sociopath, or Machiavellian, and watch for those flags early. In my youth, I'm 72, but in my youth, I would often think, oh, the problem's me. I didn't communicate enough. Maybe I need to do this or this. And down the road, it ended up getting worse. And if I would have dealt with it initially. So you want to be careful that investors really do believe in the company. And certainly the majority of them do, but make sure that you get some references and you do some background checks. I do know of founders who lost their company because the investors were, uh, a bit like a con artist. And they had them sign term sheets that wouldn't allow for future investments to come in. And rather than bankruptcy, the investors took over the company. Now that's rare, but I'd rather you not get a brick to the head.
Ugh, gosh, indeed. What would you say the current venture funding landscape looks like today?
Oh my gosh. So it is 100% better than it was just a few months ago. So a few months ago, we saw no IPs of really any note. The M&A, the merger acquisition, who's selling and buying companies had really slowed down. The private equity firms, family offices had held back from investing. And we're different today. So now the spigot has been turned on. We're seeing many IPOs. Voyager is the perfect example for the space industry, but lots of people buying companies. And that's very different than it was just 3 or 4 months ago. So now that investors have got money back from doing prior deals, whether it's an IPO or a strategic sale, they're now anxious to get their money back in the game.
Yeah. Yeah.
And on all several fronts, actually, Lisa, the PEs are being very bullish. They say this may be a banner year. I'm seeing the same thing with early stage now is, going up exponentially. So that's really good news for the founders out there that the money is there and it's available.
Yeah, absolutely. Once you've actually raised that capital, what do founders really need to be focusing on?
Well, they need to be focusing on the milestones in their plan to grow the company, to find customers. That's the most important. And but it is important that you keep in close connection with your investors, because if there's if you do hit the wall, you may need to go back and beg for some additional money from those investors. And if you've developed a really good relationship with them and you've told them the truth all along, trust is king, and they will more than likely help you again. And you want to keep that relationship. And besides that, when you go on to a Series A, I can guarantee that those investors are going to want to talk to your prior investors.
Sure. How do startups avoid that trap of raising money and without really building that long-term value?
Well, they'll avoid the trap because they'll hit the wall and nobody else will invest in them and they'll be dead. That's the the easy, the quick answer to that. Yeah. But you do have to be conservative on your milestones, and you have to tell the truth. And by conservative, I would like you to get research from several sources, and particularly people that are in that specific sector that will be honest and tell you. And you always want to have a plan B and a plan C.
Mm-hmm. Yeah. Okay. Well, I want to end with just giving you a chance to give us one last thought. If you were to give one piece of advice to every founder that they would actually follow, what would that piece of advice be?
I love Oprah, who got this, I'm sure, from Maya Angelou. And it was, when someone shows you who they are, believe them the first time. Now, that doesn't mean if you get a no, I'm not interested in investing. I've had people say no for 8 times, and on the 9th they invested. And, in the world of nature, it takes a wolf 20 times to be successful on a hunt. And so it takes a lot of work. But I'd be very cautious on that. And, persistence wins. Persistence always wins. I often see founders that do not have the IQ of others or Harvard degrees, and they get funded because they're persistent and they've learned to take rejection. But better, they will ask those people for information. What are the objections? I often teach people what I call the 2 golden questions. Explain your project and then ask, what other ideas do you have for me? And number 2, who else should you talk to? And so, for instance, on your pitch deck, make sure you go to somebody before you start officially pitching. People that have been an entrepreneur, people that can give you good and honorable feedback, because you often only get one chance. So be persistent, keep going, and pay attention to red flags that people can exhibit. And no lack of money out there, no lack of anything. I'm happy to help.
Excellent. If somebody wanted to reach out to you, what would be the best way for them to get in touch?
I'm on LinkedIn, or you can email me, Judy@judyrobinett.com with no E on the end.
Okay, excellent. Judy, thank you so much for making time to be here today and for sharing all of your insights with us.
You're more than welcome, Lisa. It's a pleasure.
Absolutely. And I do want to take a moment to thank GuideForce for hosting these sessions. To learn more about GuideForce, you can visit guideforce.com. And we'll see you next time on the Tech and Space Leaders Show.